Welcome back. Let's talk about Oracle again. They reported their third quarter earnings, and we want to bring Ivana Delevska in for perspective, founder, chief investment officer at Spear Invest. Ivana, thanks for joining us. I'm going to go through a couple of the numbers we did not already have, and then we'll talk in just a moment. So Oracle's third quarter adjusted revenue coming in at $17.19 billion. The estimate had been just under that at 16.89. Cloud infrastructure, which was a key one, coming in at $4.9 billion. The estimate had been under at 4.74, and then the fourth quarter forecast, which is key, raising a total revenue guidance to $90 billion, adjusted earnings per share $1.96 at $2. The estimate had been just under $1.95. And then 2026 capital expenditure, which we know is key for 2026, $50 billion. Now, my understanding, Ivana, and correct me if I'm wrong, was the $50 billion is actually for the year ending in May, so that really isn't anything new.
That's right, Marilla. So looking at these numbers, I think overall the reported and guided numbers are better than the street, and expectations had been low going into the quarter. So it's pretty supportive of Oracle stock at this point. The big questions and concerns from investors are CapEx as we look out to 27 and 28. So that's really where we need to understand how much they're willing to spend, how much do they have secured, where are they going to find the money, who are the customers going to be. So that's really why you've seen the stock under pressure here. But in terms of fundamentals today, we know that GPUs are selling very strong, like even older generations, even older than Blackwell, like Hopper, are selling very well. So it's not surprising that the results are so strong.
Okay, so what are the numbers, or what number would be concerning to you on CapEx for 2027 and or 2028?
Well, anywhere above 70 billion would be concerning. It's not really so much the absolute number as much as it is for them to provide confidence on their customers, because basically what's going on with Oracle's business model is that they're spending the CapEx and they're hoping that they find the OpenAIs of the world, the Metas of the world to come and build on their platform. Unlike them, other companies really sign long-term agreements with this customer. So that way the business model is a lot less risky. So for us here, Oracle still looks very risky.
Yeah, they put too many eggs in one basket.
Well, that's right. Too many eggs in one basket with OpenAI. But even if you go further than that, these are big CapEx dollars, and they don't necessarily have their own internal use cases to use them for in case things come short. So, for example, companies like Microsoft, Amazon, and Google, they have a lot of internal needs. So say they overbuild a little, they can probably absorb it with their own use cases, versus Oracle needs to find new customers, and they are very levered to OpenAI.
One of the other key points we need to mention is that the company's doing this primarily on debt, right? It is going into deeper debt to try and fund the build out. I'm wondering what it has done to raise some money to pay for this build out.
Well, I think there are many ways to raise money. I think the credit markets are still open and people are willing to lend to data center projects. I think there are a lot of equity investors that may be able to partner and step in on a project by project basis. So I think the money is out there. The question is, how secure is their revenue? So I think until you see them being cash flow positive, I think people are going to have a tough time underwriting a high valuation for the stock.
Okay, let's talk about something that came out on the weekend, which was a report from Bloomberg about a change in status of a data center in the U.S., and Oracle pushed back on that. But can you explain about the build-out and what actually stalled here?
Well, I think what's going on is still not 100% clear. Bloomberg reported that the data center build-out was not happening, like that particular project was getting pushed out or canceled. That didn't appear to be the case per Oracle, so they are still going forward with it. The question is, who is going to be the end customer? So to the prior point that I mentioned, these projects are going forward, but the question is, do you have the customer secure? So I don't necessarily think that alleviates the concerns for the long run. In the short run, we're speaking to a lot of the hyperscalers. There is very strong demand. So even if OpenAI doesn't want that site anymore, it will be filled by somebody else. Meta was one that was mentioned in the news, but it could be basically anybody that needs GPU capacity because demand is very strong right now. The concern is more like, as you look out, is this a risk you want to be taking?
Okay, let's take a step back and look at the sector a little bit more widely, because I'm wondering whether the conflict in Iran, which has taken everybody's focus away from AI, whether that's going to affect any of the build-out, either in the amount of dollars available or in a timeline, do you think?
We don't see it affecting the dollars. There's definitely, as geopolitical uncertainty rises, there is more concern in the marketplace. So from investor sentiment, I think, may be affected, but the actual build out, we're not hearing of anybody postponing projects. In fact, you really need to secure a lot of the equipment for these projects 2 to 3 years out. So the likelihood that some of these get pushed out is actually very low here. So we're not very concerned about that. But of course, geopolitics hitting the headlines, it's never a good thing for sentiment.
What's your take on the performance of some of these stocks this year and at the end of last year, because they really did come off as investors decided they were either unhappy with the CapEx spend or they were worried about return on investment and how long it would take to get there. What's your take on where the stocks and where that part of the tech sector is?
Well, what we saw as of the middle of last year is a real bifurcation within the AI trade. So it really became a stock pickers market, which is really favorable for us. So basically what you have is some companies are spending billions and billions on CapEx. It's not clear whether they're going to have the demand be there 5-10 years out. You have other companies that are providing the picks and shovels. They're making money real time. So it's actually a very interesting case on a risk-reward basis because they're not really investing a ton of money. It's all cash flow for them. So really picking where you want to be on the AI trade has really been key. And software is another one that many people expected that would be a big beneficiary of AI. And now it seems like it's actually getting hurt by AI. So I think picking where you want to be in the broader AI trade is going to be even more important as we go forward.
All right. Ivana Delevska, always good to talk to you. Thank you for joining us today.